Hey, what's up, y'all? This is Uncle P from Super Easy Forex. This is our Cha-Ching Cha-Ching Sunday video. This one is going to be short and sweet, but very important. I'm going to go over some very important news events that's going to be coming up this week that's going to impact the markets. And so I pray that you pay close attention to what I'm going to be covering because it's very important. This week is possibly going to be very rocky because many currency pairs are going to be announcing big news. And personally, for me, I'm glad that it's all happening in the same week so that we can get it over with, because typically when they do a lot of big announcements in the main week, the following week, they typically have very little news that comes out. So as I go through this particular video and I go through each one of the news events, please make sure you're paying attention so that you'll know what day these events are coming out. And then you'll be careful to trade after. If you're wise, you'll trade after the news has passed, unless you're a professional trader. Professional traders actually use this as momentum events to go in the direction of their bias that they had already understood. But many retail traders are blowing their accounts because the market was spiking both directions, knowing that retail traders are actually placing their bets with the assumption of knowing where the news is going to go and take the price action, but they have very tight stop losses. So the market will spike in both directions, take you out completely, and then it will go in whatever direction most biases were actually anticipated. So this is the reason why for professional traders, it tends to work very well because they know you've got to use very loose stop losses, but retail traders like to keep their stop losses really, really tight. 10 pips and 5 pips and so forth. And all it takes is a quick spike, take you out, and then move in the direction and you're pissed and your account is blown. So if you're going to trade it, make sure that you're using good risk management, 1%, 2% of your account, so that, hey, if you just want to participate and you can't keep your hands off of it like a sexy person that you just can't keep your hands off of, okay, fine. Then use only 1 to 2% risk of your account so that whether you win or lose, it really doesn't matter, okay? All right, so let's get into the news and then we'll be done with this particular video. So for this one, I'm going to show you guys, this is my FX book, which I show you guys I use every single week, but I like the mobile version actually better. But just for the sake of argument, when you go to my FX book, you go here to economic calendar, okay? And then down here, they have where you can see the news for tomorrow. I always click on this week because I want to know exactly what news event is coming up for the entire week. If this box pops up right here, just click right there and that'll be that. But what happens is that I want to make sure that the news that is announced after I take trades, typically for me, okay? But again, it's up to you, do what you want to do. But I will click right here on this week so that what happens is I'll get the entire week of news events ahead of time and I can plan accordingly. And this is how I plan. I actually created myself a little simple spreadsheet. So for my students who've been with me for a very long time, you remember I used to use a whiteboard, okay, a white dry erase board to do this. And one day it just dawned on me, why don't I just do it on a Google Doc? And then I can easily just, change this every week. And no matter what device or laptop I'm on, I can easily access this. So if I'm traveling, I still have access to my news events. So if I'm trading while on the road or gone, there it is. There's even the Google Drive app on the phone. So I can go to the Google Drive and just pull it up and check news events from my phone. So that's the reason why I swapped from doing it on the whiteboard and doing it here. But it's up to you. If you want to do it on the whiteboard and you primarily trade from your office, that's fine. But what I do is I'm able to now list just simply what currency pair is coming out with the news, what is the actual event, and what day of the week is it coming out on, okay? And that's as simple as it gets. Just keep it that simple. You don't need a whole lot. If you want to add in the exact time, that's fine. But, this is as simple as I keep it. 1, 2, 3. So I know that the first one that's coming up is going to be the interest rates for the AUD, which is going to be big. And you can see that here. Let me go to that. That's coming out. So here's Wednesday, and see, here's the dates right here. And a lot of, I know, and let me say this up front, and I'm a little stuffy. I know a lot of you guys are primarily technical traders, but you got to keep in mind that technicals move based off of fundamentals sometimes. This is the reason why technical traders, they can brag about being technical traders, but very few people ever make it in the markets because they fail to acknowledge that regardless of whether you care about fundamentals or not, the market does. Do you get what I'm saying? Now, if you want to be a technical trader, I suggest do like I'm doing. Just look for price action after the storm is over, because quite often they will clear the boards. You can mark up your charts all you want. Once that news event hits, the market will spike all over the place and then wipe you completely out. Then it goes back into its natural groove, and therefore you see what you need to see. Okay, but before then, you don't know where the price action is going to go, and it can spike really, really big. I showed my students the other day a chart where the Euro USD came out with news a couple of weeks ago, and one candle on the 4-hour chart, one candle was 78 pips to the downside. One candle. So you tell me, price action people, what stop loss could you have used on that situation? It wouldn't have worked because the news was so strong, it spiked real big and then it shot right back up 4 hours. It was a 4-hour time frame. So that means that for 4 hours, it just, boom, dropped in one direction, shot, took people out in both directions on the shorter time frame where you can see them spiking in, but on an overall longer time frame, it dropped all the way down and hit a support and bounce back up. So that's what I'm saying. It's up to you. Do what you want to do, but it's just safer if you're going to be a just primarily technical trader, just to be aware of what these news events are. Wait till the storm is over, then go ahead and do your thing. Unless you're a professional trader, which professional traders, they love fundamentals. Okay. Let me stop here and ask you a question just so you can think. If I was talking to, and I talked to my students about this as well. I said, if I was sitting in a room full of banks and institutions having a conversation about technicals versus fundamentals, and I was to ask everyone in the room who are bankers, because they do trade the markets as well, the Forex market, not just stocks. I said, if I was to ask them, is fundamental news important or not? What would you say? And every student said, yes, the bankers would say that it is important. I said, so if you think the banks and institutions think it's important and you're trying to use, beat the market makers methods and all these different things, how are you not going to go and do what they're doing? You get what I'm saying? If you're refusing to do what the successful people are doing, and yet you want to brag about just being a technical trader and I don't need that fundamental stuff, just throw it out. Okay, well, that's fine. Do you. But the truth of the matter is the successful people do check for news and use it to their advantage while you're throwing it out the window saying, I don't need it, but you're broke. Duh. Okay. So again, I'm not telling you need to be an expert in it, but the truth of the matter is it is important because sometimes this is what's pushing the markets. And sometimes the bigger the news event, they'll start pushing the market a certain way a couple of days in advance. Okay. Like Fed, which we're going to get into, the Fed's coming out this week, or the USD. Yeah. Okay. So here we go. Let's go over it. So right here, you see that on Tuesday, the first one that's going to be coming out is the rates for the AUD. Okay. So what I did is I simply said, okay, AUD, interest rates, and that's coming out on Tuesday. You see how simple it is? So now when the interest rate announcement is done, then I can go and look and see if the market still has a setup that I may like. If it does after the news event, then I'm more than happy to take the trade after that. Because I know the news event, it's already over. It's not going to spike on me. I don't have to worry about whether it's going to be, spiking in one direction or the other. All of the storm is over, so I can go outside and enjoy myself on this pair. But I don't want to take a trade on the AUD beforehand because I don't know what direction it's going to go. Get what I'm saying? Especially with interest rates. Interest rates is one of the highest news events for any currency pair coming out. You never want to play around with that. Never. Okay? Never. Don't ever play around with that. If there's any news event that you want to play around, the interest rate news on these currency pairs is the one you don't want to. It is the highest of all. Okay? Don't do it. All right. The next one that's important is inflation rates. Inflation rates is what's driving interest rates for these countries. So the second one you really don't want to mess with is inflation rates. Okay. So interest rates, it's the highest level. And the second level, Okay, so we have, if you were giving out Olympic medals, interest rates would get the gold. Then after that will be inflation rates, which is pressuring countries on whether to raise interest rates. So this will be second to me. Okay, so let's go and look at it. So now we're going down, and I'm not going to go through this, but you can, and they have many red envelopes. Some of this will only apply to the stock market, not to Forex. So a lot of these, this is why I really don't pay attention to it. But if you are trading the S&P, the US 30, the NASDAQ, or something like that, then yeah, you might want to pay attention to when these events are coming out, because you could be in the trade on those and a news event comes out for the US and you're in that trade and you get hit. You get what I'm saying? So you want to be careful. This is why I'm telling you, see this ISM stuff, it may move the Forex market a bit. Sometimes it surprises me and it moves it a bit, but primarily this is more going to target the people who's trading the stock market. So again, if you're an S&P, NASDAQ, or Dow US 30 trader, then yeah, you might want to start paying attention to these so that you'll know, hey, if I'm going to take a trade setup, I'm not going to trade it before this news event. Okay. Now I'm just going to go through my little calendar on Wednesday or Tuesday. You have inflation rates, job numbers. Now, this is why normally I don't pay attention to job numbers, okay, which is on the calendar. What day is this? This is coming out also on Tuesday. So let's go down and take a look at this one. I normally don't pay attention. See, this is on Monday. Here's Tuesday. Okay. Job numbers is coming out, which is for the U.S. Now, why did I put this on my calendar, which I typically don't care about the job numbers? Okay. Why? Because this acts as a precursor to NFP, which is non-farm payroll, on Friday. If you're new, non-farm payroll simply means anybody who's working at a job where you can get taxed and you don't work on a farm. That's what it means. So non-farm means you don't work on a farm, payroll. So they're counting the number of employee and people who's employed. You'll hear your president talking about that all the look, the job numbers. Look, I brought in jobs. I mean, you hear every president bragging about how many jobs they're bringing in. They're basing it off of this NFP number that's coming in. They're looking at this report just like you. Again, if the highest people in the land are looking at this, why are you thinking you don't need it? Oh my God, some people. Oh, okay, all right. Well, how you think your president is running this country and trying to keep his job? Because he's looking at how many jobs he brought in, and when that report comes out, he's paying attention too. Okay? And they brag about these numbers during the elections, which is coming up. Guaranteed. So jobless claims is coming out on Thursday, which again, this is more for the stock market, but again, just keeping an eye, because sometimes this acts as a precursor and this acts as a precursor to this. Now, can you still trade? Yeah, you can. It's not that big of a market mover, jobless claims numbers. But again, if the numbers are too far off, then it could. But normally it won't bother you, okay? But the job numbers, it's not something you really have to pay that deep attention to. But if these numbers are really, really big, you might see a little jolt in the market, okay? Because it's telling you what's coming out on Friday with the non-farm payrolls. All right, so now next we have the big kahuna. This is the biggie. Okay, this is the biggie right here. Biggie small. It ain't small at all. This is the big one. The U.S. Fed interest rate news. Here's why this is important. And let me come close and kind of talk to you guys about this one. So the reason why this one is important is because what possibly could happen is that we don't know whether the feds are going to come out and say, hey, we've raised the interest rates enough. We're going to let the market just settle. And so we're going to chill and leave it be. If it happens, oh my God, there's going to be a huge celebration in the market because people are waiting for the feds to back off on raising interest rates so they can go back to buying houses and cars and all the good stuff. Businesses can start surfacing again because they're losing ground because the interest rates are too high. Nobody wants to fool with anything because everything is too high as far as the interest rate. Okay. A lot of companies borrow money to run their business, right? OPM, other people's money. A lot of businesses are ran based off of credit. Okay. So they borrow money to run their business. But when the interest rates are too high, the profit margins are too slim. It's hard for them to make a profit and pay their employees. So therefore, guess what? Business slows down, which is why you're seeing all these people losing their jobs and companies shutting down doors. This is the reason why. The higher the interest rates, the worse it is for everybody else. Okay? You hear what I'm saying? Okay. So that's the reason why that's happening. So this announcement, let's go back to it. This announcement is going to be very important to see whether the Feds are going to raise interest rates one more time, leave it alone, or what are they planning to do in the future. So this is guaranteed, in my opinion, to rock these markets one way or the other. For me personally, there's no way I'm trading before this news event for the US dollar and any pair, because whatever the Feds do with their interest rates, it tends to cause a ripple effect amongst the other currency pairs as well. Okay. So on this day, on Wednesday, until the news event come out, I'm not trading none of these pairs. I don't care what the setup is. I'm good, bro. I am good. And typically they do their announcement around 2 or 3 in the afternoon. So, it's up to you. You do your thing, but I'm just telling you, unless you're a professional trader and you know what to look for, leave it alone. Okay. So you won't blow your account. And right after that, guess what? On Thursday, guess who comes out with their interest rates? Euro. Okay. And then again, this you really don't have to pay attention to. It's just a precursor. Jobless claims sometimes spike the U.S. pairs, but if you're not trading the U.S. pairs, you're free to trade anything else. But then you have non-farm payroll that is coming up on Friday. So that is also going to affect the U.S. So who's the main players? And this is what I told my students before. They always wonder why the AUD and the NZD and the GBP were my favorite pairs. Well, take a look at the news. Which ones are getting the least amount of news all the time? And which ones are getting the most amount of news? The euro and the US dollar tend to get the most news out of all of them. So that's the one you have to be more careful to trade than any other pair. And this happens week after week after week. The AUD only has one monthly. Look at this one. Monthly, it comes out with that. NZD barely comes out with news. The GBP, it comes out with more news. It's the third one that comes out with the most news, but it still doesn't come out with that much. And I also like trading the JPY because it doesn't come out with so much news. So what is the key that I'm trying to tell you? The key thing for me that I'm looking for is which pairs come out with the least amount of noise, because that helps me to be able to stay in my trades carefully and comfortably, and I can walk away from my trading desk and feel comfortable without panicking that something may happen, because typically most news events don't come out on those pairs. So I go over them again: AUD, NZD, JPY, and GBP. Those are my favorite ones to trade because they're more predictable, because they don't have so much outside noise, such as the news events that you can see here. Look at this: Euro, USD, 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 USD. You get what I'm saying? So that's the reason why I like those better. Now, do I see setups on other pairs, like on the Euros and the USD? Yeah, I'll take them all the time. But nevertheless, that's why I'm a little bit cautious. Okay, a little careful. All right. Hopefully this video helped, and share it. Hit the like and subscribe button so that when I'm coming out with videos, you'll be able to get this content on time, because it'll help you to not blow your account. Okay. All right. Thank you very much. I'll see you guys in the next video.